John, Pat, thank you very much for sharing your time with us today. Looking forward to hearing your views. So John, if we can start with you first. It's your first few days as chairman. What are your impressions?
Well, firstly, it's an incredible privilege to have been appointed the chairman of Aviva. We've got some fantastic businesses, it's largely centred around the UK, but some overseas. And our brand is recognised in many countries and much more strongly in the UK. And so we've got a fantastic foundation to build on. However, there are some issues that we need to deal with. Shareholders have been disappointed about our share performance. They think we're too complicated as an organisation, and so we need to simplify the organisation considerably. And they think that we could do with a bit more capital. And so we're putting in a plan to do exactly those things.
Now, Pat, you've been conducting a significant review of Aviva's businesses. What have you concluded?
Thanks, Simon. Yes, we've done a review where we split our business down into 58 significant profit centres, or cells, as we've called them. And from that, we've ranked them financially, how they're performing, and we've ranked them in their market positions. And we've categorised our businesses into ones that are extremely high performing, covering well above our cost of capital. And those group of businesses are mainly centred around the two UK businesses, UK Life, UK General Insurance, our Canadian business, Poland, Turkey and Singapore in particular are really featuring in that very high performing group of businesses. We then got a group of businesses who are around our cost of capital, maybe it's some of them slightly below. And for that group, we're putting in place specific performance improvement programs. Then there was lastly a group of business who are detracting from value of the group, who aren't covering anywhere near the cost of capital, or in some cases are creating negative value. And those businesses are non-core, and we will look to exit those sensibly over time.
You have made it clear previously that improving Aviva's financial strength is an absolute priority. So any more detail on that?
Yes, a couple of things on that. Firstly, we've said we've given a target for what we think that looks like. So in economic capital terms, a ratio of 160 to 175%, up from about 140 to 145 that we are today. How are we going to do that? The non-core businesses we'll be exiting will be kind of a significant portion of that capital increase. And then performance improvement is the second chunk, and thirdly a series of sensible risk management activities.
And John, what would you say about improving Aviva's performance?
Well, I think the important thing is to recognise that Aviva's positioned very strongly in developed markets. We have some options in the growth markets, but if you look at the centre of gravity of the group, it's in developed markets. And that's the way it will remain for the foreseeable future. In those markets, there are still opportunities for Aviva to have revenue growth, which is above the levels we're achieving at the moment. And we'll seek to find those, and we are trying to develop plans to do that. At the same time, our productivity is not as high as it needs to be, and therefore we need to reduce our expense base in the organisation. That creates the profit in the organisation. Of course, some of that gets eroded by our claims and other losses, and so we want to make sure that we have no unnecessary claims and losses to make that better. And then finally, the allocation of capital to the business. If we can actually have unnecessary capital stripped out of the business, then that profit will flow to a higher return in the organisation. So it's all of those together that create this sweet spot, which is a higher performing organisation.
So this will be among the key themes in today's presentation.
Yes, because Pat's already talked about focusing, about financial strength and about performing. And so that is the real agenda for the organisation going forward. But there are other aspects to it. Obviously, the internal culture and the performance ethic of the organisation is good, but there's a lot of opportunity to strengthen it. Aviva has been a very centralised organisation. There's some bureaucracy that perhaps is no longer needed that we can strip out. And it's been a very layered organisation, and some of those layers are unnecessary, and so we do intend to streamline that.
So reshaping Aviva is key, and also managing risk and governance. What would you say to that, Pat?
Yeah, so what we're trying to do is really strike that fine balance by having the right policies, the right controls in place, which is very important in a company like ours, where we're a big financial services company. protecting kind of people's money, whereas at the same time making us more streamlined and reducing some of the bureaucracy, some of the committees, some of the layers of management we have to go through. So we're working on that. We're making some good progress. We've really focused our efforts around individual accountability, making sure people have the right levels of authority to do their jobs well, to make the right decisions, but at the same time having the right control functions so we operate efficiently as an organisation.
So lots to be done, but it all sounds very positive.
Yeah, well, it is positive because we believe at the end of the day the company will be much more successful and much stronger as a result. Now, in terms of how we can get this done, we think we'll do quite a lot of this in the second half of this year, and we'll break the back of the programme within a year. The whole programme will take about 18 months. And so it means that by we get to the end of the 2013, the beginning of the 2014 year, we should be running on all cylinders.
Gentlemen, thank you very much for sharing your insight with me. As always, it's been very useful. Thank you.
Well, thank you.